Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.
We have a very insightful and very engaging session. We're expecting the next session that we have in line, which will be focusing on how public sector banks have embraced fintech companies and technology providers to help in their digital lending initiatives. So for this particular session, we have our customer speaker, Mr. Rajnish Khare, who is the Chief Digital Officer at Union Bank of India. He'll enlighten us with his thoughts on this topic. Mr. Rajnish has over 24 years of experience in banking, building progressive and future-shaping transformational capabilities for domestic and international banks. Along with him, we have Mr. Durgesh Nigam as the moderator. Mr. Durgesh is the Senior Vice President, Client Delivery at Lentra. He has a vast experience of bringing success to IT organizations by expanding business initiatives. So welcome, Mr. Rajnish and Mr. Durgesh.
Thank you,
Over
Pallab.
to you with that.
Thank you, Mr. Rajnish, for being here. It's always a pleasure to have you. So today's central idea is digital lending. So I'll start with that. What's your point of view of the power behind digital lending? How it has been driving the changes that's happening in this paradigm shift, and what are the key drivers with respect to PSU banks which are making you to adopt to this digital lending?
Good evening, everyone. Well, the need for digital lending is almost everybody is aware of, and enough has been spoken on that. The whole idea is to be able to, give three things to the customer. One, expand the credit base. We are a credit-starved country, but unfortunately, 80% of our lending actually goes to the people whose income is about 2.5 lakh rupees. Only 20% of the lending is actually going to people who really need the credit. So from that perspective, it becomes imperative, and they would not typically have a credit history, or they would not have the kind of due diligence which is required, and they may not even have the access to a few things because of which they may or may not get the required credit. So the digital lending, which is incorporating three things. One, it is incorporating unique algorithms. Second, it is expanding the kind of variables which are used to assess somebody's creditworthiness. And more interestingly, it is now using psychometric tools also to be able to access intent to pay, specifically in the SME sector. And the third thing is because it is able to source most of the data digitally and through most of the government organizations which have now provided you access to the data which is there, whether it is Aadhaar, whether it is civil, or any other such data. It may it is making things much easier for this segment to get this kind of digital lending. So from our perspective also, we believe that there are two things which we need to serve. We have to serve the bottom of the pyramid where maximum base of the customer is, and we also have to take care of the emerging entrepreneurial segment, which is MSME, SME segment. So from our perspective, we are doing three things. We are deploying open web journeys. We are also building innovative credit solutions. And third thing which we are doing is that we are bringing in alternative ways to be able to do the credit appraisal of a particular customer, not necessarily coming to the traditional way of doing things. We have been quite successful in some of those things. I mean, and it is a common story across most of the banks. KCC, for example, is a fantastic product which has gone when it comes to lending. It's just a 2 or 3 click process for somebody to be able to get that. Then we are looking at the MSME sector, whether starting from Shishu Mudra and going up to Tarun Mudra, Shishu Mudra, Tarun Mudra, and so on and so forth. That has been quite a successful journey. And the third thing which is now emerging is this UPI-based lending. So we are also very seriously looking at some of the ways by which we can monetize this UPI data and to be able to offer low ticket but safe loans to the people to be able to meet their day-to-day needs, not necessarily meeting their loan needs. So if you have to really look at it, we have been quite successful. We have around 20 plus journeys which are now available to our MSME customer and SME customers. We provide one of the highest, lending when it comes to GST-based lending. It goes up to 50 lakh, and it will, in some time, it will get even increase up to 5 crores. And for the low ticket line, we have obviously enabled UPI on credit, linking the credit card to UPI. And in future, we will come out with these things which will be able to take care of day-to-day needs rather than simply going for a loan for a fixed tenure.
Oh, wow, that's a lot about data evolution and technology evolution. So when we talk about this paradigm shift from traditional lending to digital lending, I'm sure there would be, it's backed by rapidly changing technology, right? So what are the key challenges that a typical PSU bank faces in adapting to these technologies? Whether, I mean, is it the legacy setup or the mindset or the policies? I mean, you talked about a lot of technology shift that you are rapidly adopting. I'm sure it is quite challenging. So how do you deal with these challenges, especially from the perspective of PSU banks? Because the kind of, I think, regulations would be a bit different than the private sector and all that. So how do you deal with that?
Well, I really don't see regulation changing from private sector to public sector for that matter. But there are three things, which we are looking at. One, the one thing is obviously investment. If you try to build something on your own, it is going to be the best way to do things for sure. But it is going to be quite expensive and quite time consuming, and the agility which is required to keep bringing changes to them would be a limiting factor. So from that perspective, now that the cloud-based services are there, the SaaS services are there, the digital lending platforms are there, the APIs are available which are able to validate data, source data, and do the analysis of the data also for you have also emerged. So it makes sense for to basically to actually go for a buy thing rather than go on a build thing. So that is a shift which is happening in PSU banks. And if you look at whether it's a clear-cut example, SBIs or Bank of Baroda's or Union Banks or Canara Bank, they have taken this route. And that has been made very, very easy by availability of reliable partners, reliable technologies, and the safety and security also getting taken care of. So I don't think that there is any challenge when it comes to building this. Plus, our regulators is also being very, very forward-looking and pragmatic, and have definitely brought in a shared services infrastructure, whether it was NPCI. Now the RBIH is building a digital lending stack. Then you have JM portal. Then you have GST Sahay. So and then now you are having OCEN and ONDC also, where you have the opportunity to be able to identify customers, lend them, and even do the make some money by enabling the transactions onto these things. So that is also going to help the public sector banks, because again it's a shared service infrastructure. So basically the cost is getting consumed between a set of 12 to 18 banks. So again brings down. And the third thing is the availability of these things, because most of these are SaaS-based services, and they definitely, the digital lending platforms have the best of the technology. They are using SaaS-based services, and they also brought in UI UX, which was the much-needed component when it comes to building digital experience. It has become, I guess, far, far easier than what it was today. So I would not say that PSU banks have to do something differently. And I will say we are in a Goldilocks zone right now.
Okay, wow. So you talked about buy versus build. You talked about the partners. So I'll not miss the opportunity to talk about Lentra now. How do you find Lentra in terms of bringing the differentiation in digital lending and the, I mean, we are very passionate about bringing the difference in this entire digital lending space. How has been your experience? Would like to hear your viewpoint.
It is tough to comment on a partner, in a public forum. Okay, ultimately, three things matter. How best a solution you are providing, how fast can you provide it, and how best you can really manage it. Because we really do not have we would really like to focus on the business rather than maintaining these things. So from this perspective, whether Lentra, for example, some of our journeys are already on Lentra, and more will come in the future. So Lentra to us has been a very reliable partner. They have a very good technology stack. The journeys which they have built on their platforms come very handy. The minimal changes are required to basically to be able to customize it. And third thing, it is coming at quite a reasonable cost to us. So from that perspective, I will say Lentra has been a very, very great partner for us. Once we start scaling up, once our journeys go live, and once we start scaling up, is when the challenge will come. At this point of time, our belief is, yes, Lentra is capable of scaling up, but maybe I will comment on that piece after 6 months or 9 months when we actually reach a critical mass. Relationship management has been, great thing from Lentra side. I have not seen many companies, proactively approaching customers, even getting into their business, understanding their business, even trying to offer some of the solutions which you may not have thought of. That kind of, engagement is really rare. And I will believe that, why it is coming from Lentra is because I think they get invested with their clients' projects emotionally. And if you get emotionally invested, yes, there are a lot of things which you can do. And it's not only true about Lentra, but Lentra has been one of the great partners.
Wow, that's some great kind words, and that makes my day. Of course, we are trying to be thought leaders, and we are not just trying to be technical provider. We are just trying to also participate in the domain initiative. I think that's where these ideas are coming from. So whatever we have been learning from various journeys that we have taken live, we try to just make sure it goes across various clients. Now, we have been talking in various other forums about this financial inclusion. The government of India has been also talking about it since last couple of years. Easier said than done. There must be a lot of challenges that we have been facing around, related to infrastructure, related to literacy rate and all that. So what are these barriers, and what have been your game plan to overcome these barriers? How do you think things are getting unfolding in upcoming years? What's your viewpoint on that?
First of all, you have to build a base, and our government has done a fantastic job when it comes to taking the benefits directly to the consumer, and that too by enabling a digital environment which is very conducive to the way our country functions. So payments were the first block which they have already conquered when it comes to UPI, or now the new initiatives which have come from NPCI, which are conversation-based, payments, conversation-based engagements, conversation-based acquisition. So now the kind of schemes they have launched, the only thing which I believe when it comes to financial inclusion should not be looked from who should get it. The cost of providing these services is actually the challenge. So even if the government comes up with with the PM Yojana, the Swanidhi Yojana and stuff like that, the public sector banks are very much equipped to deliver these kind of services, and they have been very, very successful also. The only thing I would say, the government or anybody for that matter should think of is how do we bring down this cost of service? It should not come at the cost of profitability of a public sector bank. So if you have to push the insurance, if you have to push the Jan Dhan Yojana, if you have to push Swanidhi, or you have to push even Kanya loan and all, somebody has to bear two things. One, the cost of providing these services, it must get divided. And the second thing is the amount of risk which is taken when these kind of lendings are done. Basically, these are all unsecured lendings for that matter. So some amount of risk should be borne by the one who wants us to provide these services. Otherwise, it's like taking from left pocket and giving it, keeping it in the right pocket. So the incentive to, the intent is very much there to drive these services. The incentive to drive these services, if that also comes in some tangible form, that would be the best thing to do. I don't think that we really need to debate about financial inclusion. Obviously, we want financial inclusion to happen. Obviously, we want everything to reach to the last person in the country. Bring down the cost of service, incentivize the thing so that we can service them profitably. That is what is the ask.
Sure, thanks. And the last one, how do you see the fintech as this space? Are they, you look at them as competitors or collaborators? What is your viewpoint on that?
Well, I doubt any bank or any NBFC worth their salt are looking at fintechs as their competitors at all. The fintechs, initially, the thing with fintechs is they are focused on solving certain problems. And because they are very much focused on solving those problems, they come out of the best of the solutions which are possible. Whereas if you are a very big organization, and most of the banks in India and NBFCs are quite big, I'm not talking about global scale, but even if you exclude that, we are still very big. So for us, it is, we look at the larger problems to solve. But when you are trying to solve a larger problem, you have to finally refine it also. It's just like, creating a table or an almirah at home. If you can create a beautiful table, you can make a beautiful almirah, but if you leave the edges sharp, it is going to serve you, but it is going to cut you at the same time. These fintechs are those guys, who are actually polishing these rough edges. Even in the digital lending, for example, right from, today, everything is there. You can validate a name, you can validate a PAN, you can validate an Aadhaar, you can get a GST, you can get an income tax statement. Everything and anything is there. And that has happened because most of the startups and fintechs have proliferated in this area. On our own to develop these things and connect to multiple partners would have been a challenge. Some of the very innovative solutions, specifically if you look in terms of conversation banking, for example, conversation banking has the potential to reach every nook and corner because it is basically a speech-based technology. It has the capability to support a voice-based conversation, and that too in the choice of language which you want. If the fintechs were not there, how would have you actually created these kind of experiences? So I believe that fintechs are those guys you have the larger thing in mind, but you need some specific things to be filled up there, and that is where they do the best. Second thing which they do is, there are times when you are not able to find certain solutions, to certain problems. If you give them this, they are very, very adapted, finding these solutions by focusing their efforts. And third thing is, most of the fintechs have now become partners, and as you grow, they are also growing in scale. So once a fintech grows in scale, they will not be called fintech or startups for that matter. They will become the partners just like Lentra or Perfios or Zakotas of the world in digital lending partners. They all started as a startup only. They started as a small financial technology company, and look at the scale they have achieved now. So I'm very sure that, fintechs will polish us. Fintechs will become our partners. And third thing is that once they attain scale, we may even be actually banking with each other for that matter.
Wow, very well explained. So like I said, always pleasure talking to you. Any questions from the audience? Otherwise, I'm done with my list of questions. Okay, thank you, everyone.
Thank you very much. Thank you, everyone. Have a nice day.
Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.